Okay, everybody, the recording is on. So I would like to welcome everybody to this call tonight. My name is Eugene. I'm one of the affiliate partners of eGold, and I'll be your host today. And we will also have Vishal coming on later. He is the main developer of eGold. And yeah, we can do a Q&A with him. We also have Wojciech here. He will also assist us in case of any questions. And I would suggest we get started. So yeah, tonight we were going to talk about eGold, and we had an awesome launch last week. So I think it's been almost a week since eGold has launched, and we already have 217 miners in the system. Oh no, this is actually users. So this is owners. So we have 217 wallets, and we have 291 miners. So that basically means that one owner owns in average 1.2, 3 miners, which is a awesome distribution, right? So we don't have big players in the ecosystem. The distribution is very equal. So I guess that's a distribution that Satoshi Nakamoto was dreaming about. So let's hope this will continue this way, and we will avoid big players that basically can, do harm to the system. So anyway, so I will switch over to my presentation. And all right, where is my PowerPoint? Okay, here we are. Okay, I hope you guys can see my screen. I'm the only host, that's why I need to watch the waiting room as well. So I might be distracted sometimes, but no worries. We will be fine. All right, so let's talk about eGold. eGold is the world's first mining ecosystem built in the metaverse. So before we talk about eGold and how it works, let's talk about crypto. Let's talk about the OG in this space, which is Bitcoin. And I guess most of you know what Bitcoin is. And whenever I explain Bitcoin to new people, I like to use the analogy with gold. So gold is basically the traditional store of value that has been a store of value for ages, for generations, right? And Bitcoin is the new store of value, which is to me a better store of value, because talking about gold, and yeah, apologies to my Indian friends, I know you love gold, but I think Bitcoin has superior features, superior to gold, which make Bitcoin the best asset in the world. You can call me Bitcoin Maxi, but I think that's the perfect and the best asset that has ever existed in humankind's history. So, and just imagine talking about gold. We will never know how much gold is out there, right? And we also will never know how much of that gold is real, how much of that gold is fake. Well, with Bitcoin, we know exactly how many Bitcoins are in circulation, how many Bitcoins are in the system, and we also know how many are being produced and when the production will stop, which will happen in 2140. So there is no way to fake Bitcoin. There's no way to hack Bitcoin, and it's also borderless, right? If you want to transport gold from, let's say, Europe to Southeast Asia, that will be a huge project, guys, because first you need to take care of the transport, which is a huge project, right? Let's say you want to transport $1 million worth of gold from Germany to Malaysia, right? Well, that will take you a transport company. You will need a tax advisor. You will need to do the customs clearance. You will probably need an independent inspector that will prove that this gold is real, right? Which you will not have to do with Bitcoin, of course, because you cannot fake it. So, and you might even need a lawyer, who will sign up, who will create contracts for you that will allow you to export that gold to Malaysia, right? With Bitcoin, it only takes you a few clicks, basically, and maybe a minute or two till Bitcoin arrives in Malaysia, and it will cost you probably $50 in network fee, right? So this is superior compared to what you will need to do with gold. And Bitcoin is also totally decentralized. It's the most decentralized asset in the world. It's peer-to-peer. It cannot be manipulated by a central authority. It cannot be stopped. So it's borderless, it's unhackable, and it's decentralized. So this is as far as the unique features, as far as the technology. But also, if you are in for the gains, for the financial gains, you can also see that Bitcoin is the best performing asset of all times. So here on this chart, you will see how Bitcoin was performing from 2011 till 2021, and the average growth per year was 200%. So the next best asset is Nasdaq 100, and Nasdaq 100 was giving us only 20% per year. So Bitcoin has basically outperformed Nasdaq by 10 times, right? Which is enormous. Well, we know that Bitcoin is now in a major correction, and if you have stayed, if you have been in this space for a couple of years, you will understand that this is just temporary, right? We know that the financial elite is trying to manipulate Bitcoin to shake out all the weak players, all the weak hands, because they don't want you and me to be rich, right? That's why they do anything to scare us out of this market. But once all the weak hands, all the bad actors are out of the system, Bitcoin will be heading to new all-time highs. And if you guys are still here and still hold on to your Bitcoin, I would like to congratulate you, because millionaires are made in bear markets and not in bull markets. This is the time to get into your favorite projects, not only Bitcoin, also assets like Ethereum. No financial advice, but there is many more assets that are lucrative right now, given the current correction. But to me, Bitcoin is really superior to any of other assets in the world. And we all dream about financial freedom, right? We all want to be financially independent. And when we talk about financial independence, we tend to think about passive income. So you basically invest in something that will generate passive income for you, ideally for life, right? So, and if you want to get the hardest asset in the world, which is Bitcoin, on a regular basis as passive income, the best way is probably doing Bitcoin mining, right? And Bitcoin mining is a process of many different computers being connected to one big network. And those computers, today it's specialized hardware, confirming transactions and writing them into the chain, right, into the blocks. And the blocks will be connected into one chain. And that's why we have the name blockchain, right? And Bitcoin users will use local wallets to operate or to move their Bitcoins back and forth. And only if you own the private keys to your wallet, you basically own that asset. So you always hear this expression, not your keys, not your cheese, right? So if you own the private keys to your wallet, you basically own those Bitcoins, and nobody can really take them from you. So if you don't expose your private keys, if you don't expose your seed phrase, no authority in the world can take that Bitcoin from you. All right, so this process is called mining. There's different nodes in the network, and they basically, they verify transactions and put them on a public ledger. And mining is a huge industry. In 2021, the industry was valued at $2 billion. And with the current growth of 28%, it is expected the mining industry to be at 5 billion in 2028. So it's a huge industry, but it has some challenges, right? Because the mining difficulty is very high. I mean, it was very low at the beginning before the first halving. Everyone was able to mine Bitcoins on their computers, right? So I could just use my laptop to mine Bitcoin. But now with so many nodes and so many competitors wanting to mine Bitcoin, we need specialized hardware, which is called ASIC miners. And those ASIC miners are very cost intensive. So the machine cost is very high. There is a lot of maintenance involved. And you basically have limited control over your machines in the mining farm because you don't want to keep those machines at home. They produce a lot of heat. They produce, they produce a lot of noise. You know, I used to mine Ethereum with my GPUs in my basement, and that was basically a sauna. You know, I mean, it was so hot, it was so loud. So, and yeah, I basically had to switch them off. And they were also consuming too much energy. So there is challenges with mining, and there's only a few players in the market that can do it in a very efficient and profitable way. You also need to take care of uptime. You want your miners to be up and running all the time. So you need to be connected to the internet on a constant basis. There has to be access to electricity, and you also need to repair and maintain those ASIC miners because they have a shelf life, right? So those are all the challenges. I'm not saying mining is bad, but you have to be specialized. So there's only a few players in the market that can do mining in a profitable way. So what is the solution? What is the solution? eGold mining is totally different, because eGold mining is 100% virtual. So eGold is using the unique NFT technology to run those miners. So a miner is basically an NFT sitting on the blockchain, on the Binance Smart Chain blockchain, performing mining and producing output on on a regular basis for you. So you don't need any physical machines. You don't need any physical storage. You don't need people that will take care of your machines. So you basically don't have to rely on so many parties. You don't have to rely on the supplier who delivers your machines. You don't have to rely on a person who will set up the farm for you. You don't have to rely on the storage where your machines will be based in. And you also don't rely on people who will maintain your equipment, because it's totally virtual. All you have to do, or all you have to have, is a decentralized wallet on the Binance Smart Chain, which can be Trust Wallet, MetaMask, Token Pocket. You just need this NFT that will produce eGold tokens for you every 3 seconds. Why 3 seconds? Because the Binance Smart Chain is a lot faster than the Bitcoin chain. So before the first halving, the Bitcoin chain was producing 50 coins all 10 minutes, right? Today it's 6.25. And when we start with eGold, right now we are basically in the Bitcoin 2009 moment, right? Right now we get 50 coins per all 10 minutes with eGold. So the tokenomics is pretty much aligned with Bitcoin, and we will talk about the tokenomics in a few moments, but let's compare eGold mining with ASIC and GPU mining. So the miner cost is low compared to the physical machines. We basically buy a NFT, a miner NFT, and that starts already at $20. So all you need to start mining is $20. And then miner verification is very easy. It's sitting on your wallet. If you own the private keys, it's your miner and nobody can take it from you. With physical miners, you have to store them somewhere. And as far as energy consumption, there is no energy consumption. And the energy consumption with physical machines is high, as you can imagine. The miner shelf life is pretty much unlimited, right? And we will talk about the setup of eGold miners. But yeah, in theory, the shelf life is unlimited. And with physical machines, even if your machines will be up and running after 10 years, you still need to, to see that you are using the latest technology, because the competition is not standing still, right? You probably know that there is new technologies coming out. Intel is producing a mining chip which is highly efficient. So you have to stay up to date as far as the technology. And then as far as metaverse, which is the next big thing that everyone is talking about, and Facebook has renamed themselves into Meta, and eGold mining machines will be based in the metaverse. So we will be able to go into the metaverse. We will be able to go into the warehouse, click on our miner, and see all the details associated with our miner. Okay, there is no miner maintenance, right? Because it's sitting on the blockchain. It's self-sufficient, and there is no shipping cost. And downtime is pretty much impossible, because the NFT is basically delivering all the time, as long as the blockchain is up and running. And Binance Smart Chain blockchain is very reliable. It's not like Solana that has outages, right? So as long as the blockchain is up, as long as the internet is up, we will be having uptime with our miners. So as far as eGold is a native cryptocurrency of the eGold mining ecosystem. And as I mentioned already, it will be sitting on the Binance Smart Chain. It will be operated by the smart contract. Yeah, this is the so-called DAO, decentralized autonomous organization. That basically means that it will be operating forever, even if the developers will stop working on the DAO. It can still be around and can still perform all the transactions and carry out all the jobs. So yeah, this is eGold, and eGold will be launching on PancakeSwap end of August. But before we talk about the roadmap and all the dates, let's discuss the tokenomic. So the maximum supply is 21 million, and that will remind you of Bitcoin, right? And also looking at the halving cycle, halving will happen every approximately 4 years, and the total mining period will be 80 years, which is a bit shorter than Bitcoin. So the last Bitcoin will be mined in 2140, which is, I don't know, 130 years in total. And then 20 million will be available for mining. As far as liquidity farming, there will be 100,000 tokens reserved for that over 10 years. And those of you who are part of Tech Protocol and own tech coins, you guys will have the opportunity to stake your tech coins and to earn eGold, right? And for this tech coin staking, 100,000 tokens will be reserved. 700,000 will go into the development fund that will help the developers to maintain and improve the smart contract. And 100,000 will go to the team, and 15,000 will go to trading liquidity, to get the liquidity or to get the trading started. Over the first 15 days, there will be 1,000 coins added to the liquidity, so we can start, so we can kick off the trading, basically, right? So how does it work? You basically need a decentralized wallet on the Binance Smart Chain. So it can be Trust Wallet, it can be MetaMask, it can be Token Pocket. You basically buy your miner, which you can do today. We are in the middle of the pre-sale, and during the pre-sale, you guys can get up to 6% discount on those miners. So, and then on the 3rd of August, the mining will start. So we will have to stake our miner. So on the 3rd of August, go into your back office, start your miner, and then your miner will produce eGold tokens, right? Yeah, we will go to the Gitbook in a few moments, and I will show you exactly how many eGolds will be produced, but it will be roughly 50 coins or tokens per 10 minutes, and those 50 tokens will be distributed across all miners. So let's say there is 50 miners in the system, and all 50 are the same type, let's say G2. That basically means that every miner will receive 1 token. Okay, so globally there will be 50 tokens produced every 10 minutes, and all 50 miners will get 1 token every 10 minutes. Okay, so, and there's also a very unique claim feature or claim mechanism built in, and I will show you how it works when we go to the Gitbook. But you basically will have to pay the meta fuel in eGold before you can claim eGold. So let's say you have mined 100 eGolds. To claim the 100 eGold, you will have to burn 50 eGold. You have to pay or to burn meta fuel before you can take out your mining rewards. And this will make people go to PancakeSwap, buy eGold before they can claim their rewards. So there will be an ongoing demand for those tokens. And we will also have a so-called claim tax with every claim, and we will have 10 claims in total. With every claim, the miner will wear out by 5%. So we will have to be careful with our claims. We will have to plan that accurately, but that has a huge advantage that will avoid people claiming every day or every minute and go to PancakeSwap and sell those tokens. So we will decrease the selling pressure and we will increase the buying pressure, right? So we will collect our eGold, we will sell them on PancakeSwap if you want to sell them at all, right? It might become a very precious crypto asset. So holding eGold might become a good option in future. Okay, so as far as eGold miners, we will choose from 4 different miners, and we can start as low as $20. And the $20 miner will get you 20 meta hash, and the meta fuel cost will be 50%. That's an outdated slide, excuse me guys, but this is meta fuel, not electricity cost. And I guess I just go ahead and go to the Gitbook and show you those miners. So if you want to find the Gitbook, you just go to eGold.farm. Let me do it for you. You just go to eGold.farm and then you click learn more. You see that little button here, learn more. Okay, and this is the best maintained piece of technical information that I've ever seen. So all you need to know about eGold, you can find here on this page, egold.gitbook.io/egold. Well, actually, egold.gitbook.io. That's it. But again, just click on learn more on the main page, and that will take you here. So let's see, list of miners. So let's look at G2. I believe this will be the most popular miner. It's $100, and during the pre-sale, you get 2% off. So 98 is the price. That will get you 100 meta hashes, and you will have 10 claims, right? And the mining fee let's call it meta fuel fee, will be 50%. And then with every claim, 5%, yeah, 5% reduction of your earnings, basically. Let me go to the claim tax page so you guys can see how it works. Limited claims, depreciation. Yeah, that's what I was looking for. So your first claim will have no depreciation. So you will get the full amount. So let's say you have 100 eGolds. You pay 50 for the meta fuel. You get 50 tokens back. You will pay 1% warehouse fee. So you get 49 eGold with the first claim. With the second claim, you will pay 5%. So you basically get 45% instead of 50 minus the warehouse fee, which will leave you with 44%. Okay, so this is how it works. Then the warehouse fee is pretty much stable. It's 1%. Okay, so now you might wonder, so tell me in dollars what I will earn, right? Because I guess this is the question all of you have on your mind. And actually, the team is working on a calculator that will help you to calculate your future earnings. So all you have to do is to choose the miner, let's say G2, say how many you have of those. So that will get you, you see the hash rate down below, that will get you 1000 hash rate. And this is the current network hash rate, almost 42,000. So your share of the total network is almost 2.4%. That basically means that you get 2.4% of all the global output, right? So, and here you can enter the period, the mining period. Let's say it's 1 year. And then the claim count. So basically how many times you will claim. Let's say you claim 5 times. And here you can enter your eGold price. So let's say the eGold price will be, I don't know, $5, let's say. Can I enter 5 here? Yeah. And then I hit calculate. Okay. So that means that you guys, so let's see, this will be the production over 1 year. This will be your share. You will get almost 60,000 eGolds. You will have paid 30,000 eGold for meta fuel, and you will have paid $600 for warehouse taxes. And this will be your net income, which is 17,336 eGold, and the dollar amount will be $86,000. And you, well, maybe that's, I don't know if that's a realistic example, because with 10 G2 miners, you have paid $1,000 and you got $86,000 back. So yeah, I mean, again, this was just an example. Maybe we do something realistic. I don't know, G2, 10 of those, which is $1,000 investment, then 30 days, 2 claims, eGold price 2, let's say. So with $1,000 invested, you will get $4,000 per month. No idea if this is realistic. I mean, we will have to see, because eGold will launch on the 20th of August on PancakeSwap, and then we shall see if this is a realistic example. So let's go back to the Git book. So the last thing I want to do before we then start the Q&A is the project roadmap so you guys can read faster than I can talk, but here is basically what we can expect. So pre-sales has started on the 3rd of July, which is pretty much 8 days ago, and then mining will be activated on the 3rd of August. We will see the first version of the metaverse on the 6th of August, and I can show you some teaser videos so you get a feel of how the metaverse will look like. And on the 20th of August, the trading starts on PancakeSwap, and the developers have found a great solution how to avoid big wallets in the system. So starting with the 20th of August, there will be 1,000 tokens added to liquidity on PancakeSwap, but not all at once. So there will be no way that someone will grab all 1,000 tokens at once. This liquidity will be dropped randomly, piece by piece. So we don't have those big wallets. Whales always tend to destroy ecosystems with their greed, and that's why the developers came up with this very smart idea, dropping the liquidity randomly, so we don't create those huge wallets that can dump on us and can destroy the price. Okay, well, I think I've been talking for 40 minutes now. I'll give you a break, and I will go ahead and allow you guys to unmute. So let me see what you're texting here. Oh man, already spam in the chat. Let me. Let me remove the spammer. Anyway, guys, you can go ahead and ask questions.
Eugene, I have a question
Please,
that I would like to direct to the architect or the developer. As with TechCoin or a tech protocol, I think if I can read the mind properly, they would like to see more people, more addresses, rather than a few addresses with big accumulation of whatever, whether it's eGold or whether this is the miner, the machine or whatnot. So is it the same like in tech protocol that eGold also would like to see better distribution of the participant?
Yeah, I think the answer is yes, but maybe we can have Vishal comment on this one, if you don't mind, Vishal.
Hello, how are you?
Hey, good. How are you?
Yeah. So I guess I think your question is absolutely correct, right? I mean, any market would only be as strong as number of participants. So I guess there's been a lot of learning with tag protocol in terms of how we deal with market penetration or distribution of coin in general. And I think a lot of those learnings have come useful in terms of development of eGold itself. And I think we have certain plans and ideas and the way we've implemented the project that will enable us to actually get to a larger user base. So, with coming time, we'll share those ideas, but fundamentally, the question that you're asking is a very relevant one, probably the most important one. And I think we have that on back of our minds. And even with tag protocol, as we move forward, we're going towards tag chain. And there are multiple strategies that we have in mind in terms of larger user acquisition. So we keep working in that direction. Now you just have to bear with one fact that development doesn't happen at the same speed as our minds like to operate, and so you have to build some important infrastructure features within the product that enables us to go out there and acquire more users and create greater incentive for more people to participate. So I mean, we understand exactly what you're talking about, and I think we're working towards that.
Yeah, I think in the ideal world, we will have one miner per wallet, right? This will be a perfect distribution, or not?
But that's not realistic, right? In the sense
Yeah,
that,
that's
but I
true.
mean, like I said, we cannot really, you cannot build a system that caters to individuals, and we cannot reach to individuals, but we can build a larger ecosystem which incentivizes greater participation. So, so the good example here is, with the eGold miner, one of the things you notice, you're limited to 10 claims. So effectively, even if you bought a lot of mining, you're limited to 10 claims. And once you consume those 10 claims, you're pretty much out of your mining process. Now, how does that help? So a good example would be, somebody who was a big miner in Bitcoin ecosystem, let's say in 2015, 16, or 17, might not necessarily be the biggest miner of Bitcoin in 2022. So, and the reason for that is a very simple one, that Bitcoin mining machines are a depreciating asset. And as time passes by, the people who invested big money in Bitcoin mining and made profit out of it eventually are cashed out. And either they have to reinvest and come back into Bitcoin mining, or they're left behind and somebody else does. So, that kind of creates parity for new miners. So, I mean, that was one of the things that we kept in mind. And the reason we have 10 limited claims is so that there is a destruction to the miner. And, over time, the, the parity between miners is maintained.
Yep. So we have a question in the chat. If I come with $500, how long does it take for me to take back my capital? So
It could be,
yeah.
It could be 5 minutes, it could be 500. So if we don't, I mean, like I said, there's no way to know the price of eGold, because like I said, we believe in open market trading. Now we can look at some statistical analytics, but then it turns into guesswork. So we don't really like I said, the price of eGold can be $1, $2, $50, $20. So I mean, like I said, once the market comes into operation, we will know exactly what the price of eGold is, and based on that, we can have a more assertive evaluation.
So in this simulation right here that I'm showing on the screen, you have 500 meta hash, which is $500. And
so here, I can example is the total network strength right now is 41,820 meta hashes. So what we see is the 500 meta hash is what you own. So effectively, in this case, based on current hash power, you own 1.2% of the share of the network. If the network produces 2.5 million eGold, your share will be about 30,000 of that based on that 1%. And plus the meta fuel cost that you're paying, the depreciation that's applied on your machine, minus the warehouse fee.
yeah.
Sorry. So okay, on my office. So if you will look at the situation here, so you have your network hash rate, which is about 42,000. It's your hash rate, which is about 500 meta hashes. Now, the third line is showing you your share of the network. And then effectively the production in 365 days is basically how much eGold will be produced in the first year. That's about 2.5 million eGold. Now, if you mine for a year, your share would be at this hash rate, your share would be about 30,000 eGold. And then the system, whenever you make a claim, in this case, I'm assuming it's the fifth claim. The depreciation should have shown 25%. But anyway, we'll fix that. Meta fuel fee. The warehouse fee is 1%. So effectively, you're left with net 1,195 eGold. And so effectively, based on that value, that's the total profit you're likely to make from your eGold on your fifth claim. Now, bear in mind, as more people deploy more mining, the network hash rate keeps expanding. So as just like the Bitcoin network, so earlier Eugene was saying the profit looks too high. The reason the profits were looking too high is fundamentally because we're looking at a static hash rate, which is a network hash rate. Now, bear in mind, the network hash rate will keep expanding as more miners come into the ecosystem. So your net yield will drop.
Let me just add something as well. Can I?
Sure.
Yes, Paulo.
Thank you. Because, okay, what I can see here regarding leader and regarding investor, I can see that the strategy that you are using is amazing. Amazing why? Because when we are talking about miners or people are mining, we know the miners or the people who's mining Bitcoin, Dogecoin, or Ethereum, whatever, the crypto they are mining, they all, anytime they want, they can withdraw the coins they are mining, they go to the exchange, they dump the coins. They sell any price they want, any price, doesn't matter, because they are only mining. Here, the strategy with the Metafuel is amazing because we are the people who is mining, they are also traders. So for me, if I want to go to withdraw my coins and I want to sell it, first I have to go to the market, buy 50% of the amount of the coins, and then I can withdraw it. So I'll give more value to the coins that I'm withdrawing. And it means as well that anytime I'm withdrawing my coins, it means I have someone all the time, someone who has to buy the coins because they have to go to the market, buy the coins, and because they have to buy the coins, so they can withdraw as well. And this 50% is not for the company, it's not for no one else. It's burning. The coins will be burned. And this is amazing. Also regarding the claims, only 10 claims. When we're saying 10 claims only, that's more than enough because I can choose if I can claim one time per day, one time per week, per year, 10 years, doesn't matter. I choose when I want to claim. And when I have to claim, that means it's profit, all the time profit for us. And regarding the network hash rate, if it increases, doesn't matter. It means that the price of the coin will increase as well because we have more people in our community. We have more people who has to go, not only miners, because here we don't have only miners, because people, all the miners, we all have to go to the exchange, buy the coins, and all the coins we are buying is creating demand. And all the coins we are buying will be burned. So 70% of the coins, it's burning from the total supply will be burned. So we're talking about maximum 80 years, talking about only 5 million coins. So this is amazing. Regarding the price, when Eugenia, thank you for your presentation. Regarding the price, say $2, I think the coin will go much more above $2. Why? Because everybody who will buy the miners, they are waiting for the coin to the market to buy the coin. And we have, because they need to withdraw, we need to have coins to withdraw from the miners. And we're talking about only 15,000 coins going to the market, only 50,000, 1,000 coins per day. And I can, listen, regarding my experience, I really believe the price of this coin will be very high regarding of the demand and the strategy the company is doing. It's not like the machine, you just mine when you receive the coin, go to the market and then dump the coin. Here, no, the people have to go first in the market, buy the coin. After buy the coin, I can withdraw my money. And this will be amazing because it's creating demand all the time. I just want to share this with you guys. Sorry.
Thanks, Paolo. Very helpful. So
yes. So yes, the 50%. I think somebody asked a question of what happens with these coins. So all the claim, depreciation that you're paying and all the Metafuel costs that you're paying, all of it gets burned. So like Paolo said earlier, if people mined all 20 million coins, about 72.5% of the coins would be burned. So the advantage you have is you only, if you start with 20 million, probably end up with about 5 million coins. But in the end, if all coins were claimed, you will end up with supply of 5 million. But the most important things, the coins are getting burned and paid for. So it's not a free burn. That means people have to burn coins, buy and burn coins to get coins. So that kind of creates a elastic market dynamic. And our larger objective with the project is to create, for lack of a better word, think of it like a tug of war between traders and miners, in which case both traders and miners are benefiting off each other. So effectively from a miner, the real question is when does he claim and at what cost does he claim? And the trader who's aware that the miner needs these eGolds to be able to claim is pushing, so effectively you have an incremental price pressure from both sides.
Yeah, right. And Ray is asking, so if 50% is burned with every withdrawal, there's only 21 million tokens. So does it mean that at the end, the quantity keeps dropping from 21 million to lower than 21 million? And I think we just answered, I think it will be an average 75% that will be burned.
72.5%.
Yeah, so
Because the
effectively,
first claim is zero, right? The first claim is zero. So it's basically 45%. So half of 45 would be 22.5 plus 50. So it's 72.5%.
so we might end up with 6 or 7 million, 6, 7, 8 million.
About 6 million, about 6 million, 5 to 6 million.
Okay, good. So can we swap eGold for Bitcoin? Well, we can. If you want to have wrapped Bitcoin, right? We can use Bitcoin wrapped on Binance Smart Chain.
Correct.
But if you want to have the real, the pure Bitcoin, then you will have to swap to whatever BNB first, and then go to a centralized exchange like Binance and get your Bitcoin. Okay, what else? Can you add to your meta hash over time, starting at 100?
Yes.
Yeah.
Yes, you can.
We can
So
have.
yes, you can buy machines over time. So your each wallet is limited to 25 miners. So I mean, until you have not bought your 25 miners in one wallet, you can keep buying perpetually.
Yep. Okay. Country of origin of this company. Well, first of all, it's not a company. It's a decentralized smart contract. I guess that contract was built by, yeah.
Anyway, we are based in Dubai. So we built this project out of Dubai. The entire team resides in Dubai, and I mean, we don't believe in the idea of company because I think the code is public, and we publish the contracts publicly, and everybody's free to look at these contracts and analyze these contracts. Because I think there are two things that you need to look at. When you study a decentralized project, have they made the code public? And if you have any friends, family, or anybody who's a good programmer, we are very happy for you to take the smart contracts that we build, show it to them so that they can test out the business logic. Because I think the bigger problem we have in the marketplace right now is you've got these smart contract audits which do not analyze the business logic of these smart contracts. It's merely looking at whether the contracts work or don't work. So we always encourage people to take our smart contract, whatever we make public. If you have friends, family, or somebody that is good with programming, and you want them to have a look at the contracts, it's always a good idea.
Cool. So what is the major utility of this coin? When number burned from 21 to 6 million, how the mechanism works?
So the fundamental utility is you're creating a mining ecosystem. So there are 3 or 4 key aspects to it. So one concept that we are very obsessed with is blockchain agnostic. So we do realize that there are so many of these blockchains that have come into the marketplace, and people can't keep buying a coin on every new blockchain. Now, why are we developing new blockchains? Because we believe that the blockchain can get better and better over time. So we don't know what's going to be a better blockchain in the future. So we try and build a mining ecosystem which works off the smart contracts, and we have the ability to migrate the smart contracts from chain. Let's say right now we are hosted on Binance chain, and if tomorrow Solana does really well, we can always migrate this entire ecosystem to Solana, or we can even build our own blockchain in future and migrate the entire project to that particular blockchain. Now, what that does is you've got tokenomics of eGold, which is consistent, and which can continue for next 10, 20, 30, 40, 50 years. And people don't have to worry about what blockchain eGold operates on. So that basically we call as blockchain neutrality, where you create a project in tokenomics, where the supply is limited, there is a system in place, and people can essentially, choose what blockchain. The community can come together and choose what blockchain we need to operate on. Like started on Binance chain, we can always migrate to Solana or Polkadot or Atom or Cosmos, or even back to Ethereum if Ethereum upgrades become better. So we have all of those choices open. So that's advantage one. The advantage two of eGold is that since it's a metaverse project, so we're starting with mining of eGold as phase 1 within the metaverse, where we're setting up an eGold mining city, where you'll be able to look at your machines. But as we grow the community, there is future potential to develop a larger eGold city, and maybe sell land and create a resource-based economy within the metaverse. Think of it like gamification of real life on the metaverse, and then people can utilize this eGold to buy land and other resources they might need to build on this land. So that's a larger objective here from a utility perspective. Now, I mean, these things take time, but that's where we are headed towards in terms of utility, and that's the broader vision of the project.
All right. So since a miner can have up to 10 turns, if one comes with $500, can give 5 turns. Is it possible to add another 500 sometimes in the future to make up for the 10?
No, each miner accounting is independent. So once, let's say you buy a $500 miner, so the count for each miner is maintained independently. So if let's say you bought a $500 miner and let's say 500 meta hash miner and you consume 10, you can always buy another one, but you cannot club 2 miners together. That's not a possibility. But each miner will operate as an independent entity.
So what's the total commission distribution after distribution remaining amount added to liquidity? Can you have a look at the chat?
Yeah, I think there is, so if you want to understand the commission structure, we have a page which invitation program.
Yeah,
So
let's cover this quickly and then we can answer the question. So the uni-level plan will feature 16 levels in total. And to qualify for those levels, you will have to generate some direct sales. So let's say if you have $400 in your first line, so someone coming in with 4 G2 miners or 4 people with 1 G2 miner each, that will open up 9 levels for you, and you will earn 12% from the first level, 6 from the second, 5 from the third, and so on and so on. And if you will start generating more volume, let's say you reach 40,000, it doesn't matter how those 40,000 are distributed. It can be in the front line, it can be like 100 levels down, it doesn't matter. 40,000 team sales will open up 1% infinite commission for you. So that means not only you get 1% more on those 16 levels, you also get 1% on levels beyond 16, right? And if you reach, let's say 1 million in sales, that will add 5% to your 16 levels, and it will get you 5% from level 17 and beyond, right? So what is the total commission payout? I need to do the math. Is it 45? Yeah, I think it's 45 something percent in total. Okay. You want to have the depreciation explained again? No problem. So you go to depreciation in your Git book. So your first claim will not depreciate the miner. So you get the full claim, right? So let's say 100 tokens that you want to claim. You burn 50, you get 100. So with the second claim, you burn 50, you get 95. So, and Vishal, correct me if I'm wrong, but yeah, with every claim,
increment of 5% depreciation.
Yeah. Right.
So it's claim 2 is 5%, claim 3 is 10, and by the time you reach your 10th claim, you will have a depreciation of 45%. That means if you mine 100 eGold, you paid 50 eGold as meta fuel, and your 45% would be paid as be charged as depreciation. Now the depreciation essentially is nothing but like even in real world, when you buy a Bitcoin miner, it is depreciating in production over time, right? So I mean, you don't produce the same amount of Bitcoin every single time, and eventually your Bitcoin miner becomes redundant, or your Ethereum GPU miner also becomes redundant beyond a certain point. So effectively, we apply this depreciation within the metaverse mathematically. So effectively, you have a 5% depreciation on each claim. Now, the two good things about the structure here is there is no obligation for you to consume your 10 claims within a given period of time. Meaning, you can use this 10 claims that you have in period of 10 minutes or even 10 years or even 100 years. So, there is no time limitation, but the depreciation is activated every time you make a claim. Now, that first claim that you make could be in 3 days or 30 days or 3 months. That is a choice that the individual miner can make. And the depreciation will only be attracted to the miner once he makes it. That's a distinction here. So there is no time limitation, but as you claim more, your depreciation increases. And eventually on the 10th claim, you have a 45% depreciation. That means your 11th claim would attract 50% depreciation, at which point your machine does not produce any.
Right. Thanks, Vishal. So can I earn from my sponsor? The answer is no. Here's no binary, no spillover whatsoever. 6 million remaining coins in the market looks very low to create a big noise in the global market. Well, there is coins that have only 10,000 total supply. So for sure, the demand will increase during early stage of mining and burning, since both happen simultaneously, but yet 6 million remaining in the global market sounds too low. What is your idea about this?
So the supply of coin ultra is a relative argument, right? So either we can create a high value coin. Bitcoin is a good example, right? These trade at 50, 60,000. And there are plenty of coins that trade in the $5, $10, $20,000 range. And there are plenty of coins which trade for cents. Now it's an individual choice. Now, some people have affinity for low value coins and some people have affinity for high value coins. So, I mean, it's a choice. I mean, like I said, in the market that we operate in within the crypto space, you've got Doge and Shiba and a YFI, which, Shiba supplies in zillions, and you have a YFI, which has only supply of 10,000. Both are on extreme different side of the spectrum, and both have done relatively well. So, I mean, there's no consensus on what the right tokenomics is. But in our case, because we're building a mining-based ecosystem, we believe that, the coins that the miner value should always exist. And because until the time the miners are incentivized to keep mining, the network keeps expanding, and that kind of has an impact on the price of the coin. And the mining is a good thing. Why? Because you will find seldom that a lot of coins don't have a mining ecosystem, right? They just create a X or Y number of coins, resell it to users, the coins themselves, and then effectively they don't have any sort of production cycle. And that kind of leads to people losing interest, because the only value left is speculating on the coins. If you do not develop a strong mining ecosystem behind a coin, there is no dedicated community that you build to support a coin. So in our case, we believe that building that strong mining ecosystem is very critical, and that's what we aim for. But more importantly, in terms of the token supply, the specific question you're asking, I mean, it's a relative argument. So I mean, whether 6 million or whether 60 million or whether 1 million, what is a good supply? I mean, so I think it's all relative to demand that we can generate in the market for a particular point. So I don't think there is a consensus within the crypto community of what the right methodology is.
Right. So if 45% distribution, remaining 55 will add to liquidity in PancakeSwap? Well, no, but maybe you, Vishal, can explain.
No, the other cost is the project development cost, right? We have a lot of developers and people that work with us, and we have to pay salaries. And the developers, the good ones, they're not necessarily cheap. So, and plus the infrastructure that a decentralized system needs to run on the back end to support the entire initiative. So all of that combined has a huge cost. So I think the rest of the cost pretty much goes into that. And bear in mind that 10% of the value is also going towards stack coin. So you're putting about 10% of the value in burning stack coins. So effectively the company or the system or people, the project creators are left with 45%, which the salaries and the infrastructure costs are paid for.
Okay. So in essence, as regarding the depreciation, if you don't claim, how long does it keep mining? Yeah, forever. The answer is forever.
Yeah. The answer is perpetual. The miners are perpetual. So if you're not going to claim, no, it's not perpetual in a sense that you have a 4-year halving. If you look, if you can scroll up slightly, Eugene, the eGold mining production cycles. Yes, so here, if you see the situation, I think the ideal time you would leave your miner untouched would be 4 years, because post 4 years, you're going to have to claim your eGold and switch to the contract two, because effectively we will be deploying 20 contracts with the specific amount of eGold mentioned in the token supply. And every 4 years, the one contract will collapse, and then people need to withdraw their eGold from contract one and move to contract two to continue mining. So yes, so in theory, your miners are perpetual. You can make your claims whenever, but you typically end up making at least one claim in 4 years.
Okay. So please explain that the smart contract will continue to move if developer is not around anymore, asked by a friend.
So the smart contracts are already pre-developed and put on the BSC chain. So that means the developers are not really required. So we built an interface, which is the eGold.farm interface that you're looking at. Now, there's nothing stopping a second or a third party from building their own interface, right? They don't need our permission to build their own interface. So as far as interfacing with the contracts are concerned, we're building an interface that's a dependency on us to maintain the interface. But, as we grow into a larger ecosystem, there is nothing stopping from any second, third, or fourth person to develop their own interface to interact with the contracts. And the contracts will remain on the BSC network perpetually. So even if the developers don't exist, the contract will still continue performing the functions.
Right. What will happen after the 10 claims, basically? Well, the NFT becomes useless. Is that a fair?
Yes. So yes, NFT after 10 claims, your miner basically becomes unprofitable. At this point, the best strategy for you would be to burn your miner. So we're going to build in a function on the user interface where you will be able to burn your miner.
And I think I didn't mention that, but since this is a NFT, you guys can move it from one wallet to another, right? So if at some point you want to get out of the system, let's say you have still 5 claims left on your miner, you can sell it on the open market. You can sell it OTC at half of the price whatsoever. And yeah, and get rid of your miner. This is possible. But will you guys build a marketplace for those miners, Vishal?
We will, but these particular miners, because they're limited use, building a marketplace. I mean, we could build a marketplace, but I mean, we're contemplating that. We'll see how it goes based on user experience and feedback.
Yeah. Because selling NFTs to random people is kind of risky. That's why I'm asking.
So this can already be listed to all existing NFT marketplaces. So people don't realize they can actually go and upload these NFTs themselves on every existing NFT platform.
Yeah,
marketplaces.
Yeah, like element markets.
Yes.
So will eGold move to tech chain in the future?
I mean, that is a plan we have that we will move eventually. Once the tag chain is done, we will move eGold to the tag chain. Yes, that's a plan.
Okay, cool. Well, before we wrap up, guys, I want to show you a teaser. I want to show you how the metaverse might look like. Just a short teaser video that was introduced to us in Dubai. So the name of the mining city will be eGold City, as you might have figured already. And then this is how it will look like. So we basically walk into the city. We walk to the warehouse where our miner is based, and then we click on our miner and we get all the data associated with our miner. The number of claims left, all the claims, all the transactions associated with this miner. And then in future, we will be able to put on our VR glasses and just walk into the city, do some shopping. And this comes back to the use case question, right? I think everything we will be able to buy in this eGold city will be paid in eGold, right?
So your account. So the question they've asked is, if the account be inactive after 10 claims? No. So your account is essentially your wallet address. So we cannot inactivate your wallet address, but your NFT, the miner itself, would become deactivated but you can always buy another miner and continue using the same wallet and continue mining. So we don't deactivate account if a miner runs out.
Correct.
Eugene, you don't talk about halving, isn't it? I thought this halving.
There will
Having
be.
every 4 years.
Yeah.
Yeah, but you use the same interval of 4 years. You can probably achieve the same thing if you were to do it every year like TechCoin. Yeah? So I just wonder why having to play much role here.
So the halving cycle depends on the kind of project you're building. So in this case, if you realize the first 4 years, 10 million, that means the first 4 years would have a 5 million demand. So, where the tokenomics of this project is built, actually the halving cycle wouldn't have a massive impact in that sense, because half of the like I said, if people mine 10 million coins in the first 4 years, they will need 5 million eGold to be able to claim it. So I mean, so that dynamic doesn't really change.
Okay. Yeah. Interesting question from Ray. Some of us never knew about the tech protocol. We just got into eGold ecosystem. Is there any need to be part of both ecosystems, or is membership into the eGold ecosystem automatically get us into the entire tech protocol system?
So prior to eGold, we developed a project called tagprotocol.com, which is still active. And the tag chain that we keep discussing is essentially a blockchain built for tag coins that we're working on. So there is no interdependence between the two projects directly, but they are codependent, not interdependent, in a sense that they both feed off each other. And the idea is we are trying to build a larger ecosystem with tag protocol, tag chain, and you're trying to build our own blockchain for tag coins. And so if the people who already hold tag coins, you're allocating about 100,000 eGold that people who own tag coins can use directly to farm eGold. Now that 100,000 is essentially divided into 10 parts. That farming contract will be active for 10 years. That essentially means that tag coin holders can farm up to 10,000 eGolds a year for next 10 years. And ones who already have tag coins can utilize those tag coins if they wish. So I mean, that's where the limited thing isn't. If you see, we're already burning every time somebody buys a miner, 10% of the value is utilized to buy and burn tag coins. So if what Eugene is showing right now is the interface on tagcoin.io, where every time a miner is being sold, you see a X or Y amount of tag coin purchase and burn. So you can see there are already like 330 transactions, and about 896,000 tag coins have already been burned, which are roughly worth about 155 BNB. So, that process continues. We are developing the ecosystem, and we have a larger vision, what we call as Vision 2025. We believe that, Bitcoin halving will happen in 2024. And there are, what we hope to accomplish here is establish the ecosystem before 2024 and have a decent user base so that we become part of recommendation list of most traders over the next 18 months.
All right, cool. So guys, I think we will take one more question and then we wrap up. So let's see. Well, if you don't get any.
I have a question. Hello, sorry.
Hello, good evening.
Good evening.
Yeah, this is Alex of Pennsylvania, USA. I would like to know how long will it take? Like, for example, somebody just joined, gonna buy a mining machine. How long will it take to get the ROI of a 5,000 worth of interest?
So we can't really tell you the exact time or date, right? Because the price of eGold depends upon the market, right? So we don't really control the price of eGold ourselves. We build the system out, and what we try and do is we understand the base principle of how trading and market works. So we try to best of our ability to build systems that will create value. But we are going to be releasing a mining calculator probably tomorrow on the website, and you're free to use the mining calculator to evaluate, the profitability at different price points. So whether, the would be 30 cents or $1 or $2, you'll be able to, run through these different scenarios and, evaluate for yourself that what could be profitability at a certain price point.
Okay, second question.
Yes.
What happened then if a guy who is going to sign up under me, or that he got no ability to do the networking, getting people into the business?
He doesn't have to, right? It's not necessary. He can just simply buy a miner and be a miner. It doesn't have to be a marketing.
So therefore, if you are just going to buy a mining machine, your money will earn without getting people under you?
Correct.
Yes.
Okay. Third question. How long
I
does
think
eGold...
just don't confuse the two processes. The process of marketing the product and process of using the product are completely independent of each other.
Okay, I got you. Third question. How long does eGold evolve in the global platform?
How long?
Yeah.
Come again. How long what?
Yeah. When this eGold got started?
8 days. 8 days.
eGold started probably a week, about 8 days ago.
Yeah.
I see. Okay. Oh, thank you so much, Guy. Well, we'll try to do this. We've got a huge team globally anyway, so we'll be in touch with you. Thank you.
Absolutely.
Thanks
Always
for
happy to answer.
So we take Datuk's question and then we...
Yeah, Vishal, in the uni-level and infinity income system, it's good to know who is the introducer, or rather your parent or whatnot.
We
The
will
current
be
situation.
so we are releasing the tree map very soon. So in a day or two,
Thank you.
we'll see the tree map.
Thank you.
Well, already now you guys can see a structure. I think since today, you can see a
Yes.
structure in the back office.
Yes. I don't know if you can display that. So I think we activated the tree already.
The structure is already on.
Yes.
Yes. All right, good. So I think we can wrap up. Thanks, everybody. I think it was a great session. And
Thank you.
again, so this is a invitation only program. So you guys will need a referral code from your sponsor. And the referral code is basically the wallet address of your sponsor, right? So all you have to do is you have to have a decentralized wallet on the Binance Smart Chain. This can be MetaMask, Trust Wallet, Token Pocket. You will need some BUSD and you will need some BNB to pay for the fee. So to sign up, you will go to eGold.farm in your integrated dApp browser. And then you go to the sign up page. It will ask you for the referral code. You enter your referral code. Then you go to buy miner. You approve BUSD and then you buy the miner. And then you go back and to go to manage your miners. This is where you will see all your miners. And then if you want to grab your referral link, which is basically your address, go to invite and earn. And this is where you will find all the links. All right, everybody. Thanks for being here. Thanks for your attention and see you soon.
And thank you, everybody. Yes.
Thank you. Bye.
Bye.